Hey, good morning. Let's go over today's trade plan. So in yesterday's plan, I talked about the importance of the breakout above 53.75 to 55.75 and how a break above that area would tell us that there is upside directional conviction and we could test 63 to 66 and then eventually even test the resistance zones above. So that idea played out in the overnight session where yesterday we got to the 66s and then we balanced at the highs and then overnight we broke out again and tested 72. So at this point, heading into the open, heading into the day, the main thing to keep in mind is that it is quadruple witching, options expiration and futures expiration, and sometimes that can lead to some limited range extensions where moves abruptly come to an end, and it's more of a two-sided market. Now that doesn't mean that we can't continue heading higher, but it just calls for a bit of caution because you are trading very near the all-time high, and on quadruple witching, even though we could head up and test the all-time high, at that point, responsive sellers could step in, and we may not get a extended move to the upside. And for that reason, it's better to get involved at conservative trade location. Even though buyers are in control, we could get a pullback again to 64.5 to 67 to fill that gap, perhaps retest the overnight break, and it's just overall, I think because of quadruple witching, unless you're seeing some very clear strength in the market or very clear weakness in the market, it's better to focus on obtaining a more conservative trade location so that you at least get some short-term price edge to see if the trade idea is going to work out. So on the long side, you want conservative trade location, but because buyers are in control, you can be a little bit more aggressive. On the short side, you definitely want to be more conservative above the 64.5 to 67 micro bull bear zone, because above that zone, buyers are in firm control, and the short setups could be, just smaller rotations as opposed to, bigger all-out failures. So that means if you are going to take a short, then look for a very clear sign in real time. So look for, weakening internals. Look for a relatively balanced tick or a negatively skewing tick. And even then, enter at conservative location at resistance and look for a conservative target as well. Don't look for an extended target because unless there's some all-out weakness that's very clear in the market, the short trades could be just rotational type price action. So, our primary focus is still going to be on the long side, and considering that ES is approaching the all-time high, I think short setups are just they carry additional risk. So the main focus will be conservative setups, but preferably on the long side. Now, the 64.5, 67, we're using that as the micro bull bear zone. Buyers remain in firm control above it. But even a break below this zone doesn't necessarily mean that sellers are in control. At this point, we've broken out from this short-term balance up here, and this is the top of that balance. So if we break below it, it doesn't necessarily mean that sellers are now gaining control. It would just mean that we could end up with more of a balanced session, but buyers can still step in at the support zones below. So at the 59.5 to 60.5, buyers can step in here and push ES back up towards the 72 to 75. And 54.5 to 56.5 would be quite a steep pullback. I'm not expecting that in the market today, but in the event that we do get, that deep of a pullback, I think that responsive buyers will be active their first test, and we can quite easily get a bounce off of this zone back up towards the 64 to 66 area. So in the event that we do pull back all the way here, I think short term the sellers will be exhausted, and we can get a bounce just based off of some short covering, and anyone who's missed the move, those buyers stepping in at the 54.5 to 56.5. So ideally, buyers hold it above the micro bull bear zone. We balance at upper end of the range now, near the all-time high. So we balance in this range from micro bull bear to initial resistance. 72 to 75 is still valid resistance until it's broken, and we've already gotten some rotational price action off this zone. And if we get a deeper pullback, doesn't mean sellers are in control. We can still get bounces off support and then simply balance. So the main theme is still going to be to look for conservative trade setups because of quadruple witching. If it was any other day, we would be a little bit more aggressive on the long side because buyers are in clear control here. And, at this point, the next major inflection point is the 1880 half all-time high. And, even that level can now be taken out. Keep in mind that we've balanced in this range for a few days. Overall, we've balanced for quite some time. So at this point, we've seen that sellers have failed to push this market much lower than the bottom of the balance, and now we're approaching the top. We can get some sellers on first test, but eventually, if we hold above the 64 half to 67, the market will be setting up for a break to a new all-time high. Doesn't have to happen today on quad witching. Could be something setting up for next week, but we are more bullish than bearish here, and we have been. So just keep those ideas in mind, and just see where ES is trading in relation to the bull bear zone. Use that to establish your overall bias. So we'll keep an eye on the micro bull bear zone here, pre-market resistance, and depending on how deep of a pullback we get, that'll tell us how strong or weak the market is, and we'll take it from there.